Hello everyone, welcome to Diplomatic Brief. To suppress China's development, the US has been ramping up restrictions on high-tech products exported to China. However, as China's independent R&D capabilities boom, some American companies worry this suppression might end up being the US shooting itself in the foot. Recently, Jensen Huang, CEO of Nvidia, said that due to US export controls, their company's market share of high-end chips in China has dropped from 95% to zero. He also stated that the withdrawal of American tech products from the mainland Chinese market is a mistake, and Nvidia will continue to strive to re-enter the mainland Chinese market. He warned that the US technological blockade against China not only harms China, but often also harms the United States, and sometimes even more severely. Earlier this month, Jensen Huang delivered these remarks while attending an event in New York hosted by Citadel Securities. On October 15th local time, Citadel Securities released a video of the conversation between Jensen Huang and Sequoia Capital partner Alfred Lin. The topic, it was Nvidia's Jensen Huang talks artificial intelligence, AI, and the next growth frontier. During this conversation, Lin asked Jensen Huang about his views on the US restricting AI computing power exports to China. So what exactly is the approach? Jensen Huang said that US policymakers want their country to win the AI race, but it's important to remember that actions that harm China often also harm the US, sometimes even more seriously. Before rushing to implement policies that could hurt others, perhaps it's better to take a step back and reflect on which policies are truly beneficial to the US. He pointed out that the core of the software industry is its developers. Only by winning over developers can you create the platforms of the future. And China has about 50% of the world's AI researchers are in China. Prestigious schools are extremely focused on and passionate about AI, and it's not right to prevent these researchers from building AI on top of American technology. In Jensen Huang's view, the core issue is how the US should balance maintaining its technological lead while also ensuring that the world builds on American technology stacks. He believes the US needs a nuanced strategy, not a black and white approach. It should develop a sophisticated and evolving strategy over time. The US needs to both maintain its technological lead and continue to win over researchers from around the world. Jensen Huang revealed that Nvidia's market share in China has already dropped from 95% to zero. He said, "At present, we have completely withdrawn from the Chinese market. I can't imagine any decision maker thinking this is a good idea." In other words, US policy has caused America to lose one of the world's largest markets, dropping to zero. Now, according to a report from Zhaobao on October 16th, Jensen Huang's remarks echo his consistent stance. If Nvidia is unable to sell products in China, the market will be taken over by Chinese competitors like Huawei. According to several supply chain sources interviewed by a Chinese financial magazine, it is conservatively estimated that in 2024, the shipment volume of Nvidia's H20 series chips in the Chinese market will be about 600,000 to 800,000 units, while a mainstream domestic AI chip will have a shipment volume of about 300,000 to 400,000 units. This means that Nvidia's market share in China in 2024 exceeds 60%. Nvidia's 2025 financial report also shows that its revenue from mainland China and Hong Kong reached $17.1 billion, a year-on-year increase of 66%. Mainland China and Hong Kong together account for about 13.1% of Nvidia's total revenue. Due to US export controls, Nvidia's revenue share from mainland China and Hong Kong has declined for 3 consecutive years. With the rapid development of AI technology, Nvidia's graphics processing units, GPUs, have helped make it one of the most talked about companies in the world. This year, it even became the first company in the world to reach a market value of $4 trillion. However, since 2022, in order to suppress the development of China's chip industry, the US government has implemented strict export controls, and Nvidia has been banned from exporting products used for AI to China. The high-end GPUs used for these applications include the A18, H18, and H28. This year, after the Trump administration came to power, the US even once again banned Nvidia from exporting to China. Nvidia's H20 chip, which was specifically developed for the Chinese market, later regained its export license to China in July after Nvidia lobbied and the company agreed to hand over 15% of its China sales revenue to the US government. However, the controversies surrounding Nvidia have continued to spread and intensify ever since. On July 31st, in order to protect Chinese users as well as network and data security, the Chinese side summoned Nvidia, requesting the company to explain the security risks of vulnerabilities and backdoors in the H20 computing chips sold in China and to submit relevant supporting materials. The new media account Yuan Tantian under China Central Radio and Television published an article directly naming the H20 chip as neither environmentally friendly nor advanced, and even less secure. It is not a good choice. After launching a case investigation last December into Nvidia for suspected violations of the anti-monopoly law following 9 months of investigation, Chinese regulatory authorities issued a statement on September 15th. Nvidia had violated the anti-monopoly law and decided to conduct a further investigation in accordance with the law. Reuters reported at the time that the latest statement from the Chinese side brought even more uncertainty to Nvidia's business in China. Last year, the Chinese market accounted for 13% of its total sales. The New York Times also quoted analysts as saying that this is part of a broader effort by China, aiming to use regulatory policy tools at its disposal, along with diplomatic negotiations, to increase China's access to advanced semiconductors and to surpass foreign competitors, ultimately reducing dependence. Public opinion generally believes that China's confidence in dealing with violations by chip giants comes from the collective strength of China's tech industry. In September, Huawei made the rare move of announcing a 3-year vision, aiming to challenge Nvidia's dominance in the AI field. Bloomberg noted that Huawei's next-generation Ascend chip will adopt a superport design using Huawei's self-developed Link Interconnect protocol to achieve 1.5. 8 million Ascend AI chips will be connected together, and it's claimed that the speed is 62 times faster than Nvidia's next-generation NVLink 144 solution. According to a report by the South China Morning Post, besides Huawei, Chinese internet giants such as Alibaba, Tencent, ByteDance, and Baidu are also increasing their investment in chips. Through internal R&D and external investments, they are strengthening their control over the supply chain. Jensen Huang has publicly pointed out that China is the world's second-largest computing power market. By 2026, the scale of China's artificial intelligence market will reach $50 billion. Entering this market represents a huge opportunity for Nvidia, and it will also promote U.S. tax revenue, employment, and growth. According to reports from mainland financial magazines, Nvidia is still maintaining significant investment in China. They still have a large team of engineers in China, and this team helps Chinese tech companies stay compliant. The H20 and other chips are being adapted to support domestic models like DeepSea, allowing these large models to fully unleash their potential performance on Nvidia's chips. The latest news shows that sales of Nvidia's H20 chips in China have almost come to a halt. Because of this, Nvidia hopes to actively promote the approval of export licenses from the US for its current generation of China-customized GPUs. Last month, Jensen Huang commented on a podcast that China is only lagging behind in the chip sector. The United States has extremely strong potential in chip research, development, and manufacturing. He called on the US government to support American tech companies in competing in markets like China to enhance America's influence. According to the Australian news site NKL in September, the meaning behind these remarks is that Nvidia can only benefit from a stable partnership with China. Although Nvidia currently continues to lead in the AI chip sector, Huawei's progress over the next 3 years will definitely be very interesting to watch. In fact, Jensen Huang's concerns are gradually becoming reality as the pace of domestic chip substitution is even faster than what American companies had anticipated. According to a Bloomberg report on October 17th, Chinese AI chip company Cambricon's revenue in the third quarter reached 1.73 billion RMB, a surge of more than 13 times compared to the same period last year. Moreover, it turned last year's loss of 194 million RMB into a profit of 567 million RMB. How are Chinese chip manufacturers benefiting from US technology sanctions? One of the most striking signs is that Cambricon, along with Nvidia and China's leading company Huawei, is riding the wave of China's AI development boom and the trend of domestic substitution. According to documents submitted to the Shanghai Stock Exchange from Alibaba Group to DeepSea, Chinese AI developers are increasingly relying on local alternatives to replace Nvidia GPUs needed for AI training. Cambricon, often called the Nvidia of China and China's #1 AI stock by retail investors, is benefiting from US technology policies. It is one of the few Chinese tech companies that have risen due to sanctions. At the same time, Beijing is also discouraging Chinese companies from using Nvidia's H20. Cambricon is expected to achieve annual revenue of about 5 to 7 billion yuan this year, a significant increase compared to last year's mere 1.2 billion yuan. To summarize simply, first, Nvidia is facing a dilemma. On one hand, it wants to sell products to China to make big profits, but on the other, it does not want to sell its most advanced products to China. In the end, this has forced China to make progress. Second, the US. The US wants to sanction China, but this ends up hurting its own companies and putting them under pressure. American policies are inconsistent, and Chinese users need a stable supply. So the more Trump stirs things up, the faster American companies will face the speed of Chinese domestic replacements, meaning they will lose the Chinese market even more quickly.